market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Venezuela's acting president, Delcy Rodríguez, has invited the U.S. to work together with her country within the framework of international law. It comes as President Trump says the U.S. needs, quote, total access to Venezuela to rebuild the country following the capture of President Nicolás Maduro. Now, the U.S. swooped into Caracas over the weekend, seizing Maduro and flying him to New York to face drugs and weapons charges.
We need total access. We need access to the oil and to other things in their country that allow us to rebuild their country.
Well, joining us now, Will Kennedy, Bloomberg's EMEA News Director, Peter Trubowitz, International Relations Professor from the London School of Economics, and Tina Fordham, Founder and Geopolitical Strategist at Fordham Global Foresights. Now, this feels like a huge world shift in the world order. We'll get to that in a second. Will, what are the implications for the oil markets? I mean, Venezuela is so huge in terms of what it has underground.
Yeah, but it's going to be a long haul if much more of that oil is going to get from underground into global markets. You said already that the spot price of oil remains largely unmoved by the events over the weekend, which I think really shows the diminished role of Venezuela in global oil markets. Today, it's 1 million barrels of production in a world that produces more than 100 million every day. I think the action you showed in Chevron and Conoco, however, is fascinating because I think that shows that investors are taking seriously the prospects for a much broader involvement of the U.S. oil industry in Venezuela, home to the world's largest oil reserves. And if, and I think it remains a very big if, those companies can be persuaded that there will be stability, there will be what they need to be able to operate there, it could be a really big sea change in the oil industry in the Americas region.
So, Tina, I mean, this is not about drugs, this is about oil. And does this go back to the National Strategic Plan that actually President Trump put out in November?
Well, Trump has said that it's about oil, but I think it's really important to remember that the United States doesn't need oil. The United States is a net exporter of energy supplies. What Trump appears to be doing is not nation building, but let's take him at his word, rebuilding the country, and U.S. energy majors are going to make that happen.
What do we know about the energy majors wanting to come in, or they've kind of been on the fence?
So I think different for different companies. Clearly, Chevron has been the one that has always stayed there, managed to maintain its foothold in Venezuela. I think they will be probably quite positive about the events in that it was likely to put their continued presence in the country, which we've heard the CEO say repeatedly they are keen on, and maybe down the line expanding that presence. Conoco is an interesting one because it feels that it was expropriated by the Chavez regime and needs some recompense. So I think there's the prospect of perhaps Conoco finding a way back in. Exxon has said they will wait and see. I think what's really important for all these companies is that they get some clarity on the prospects for stability in Venezuela and any regime that they'll operate on. Because if they're going to go back, it's got to work for them for 5, 10, 20 years, not just next year and the year after. And to Tina's point, the US has plenty of oil now, but geopolitically they'll be thinking about, well, what happens in the 2030s when the shale bonanza starts to wane.
Okay, well, thank you so much. Peter, when you look at, what this means, or what kind of conditions the U.S. is setting for Venezuela, when do we find out what this looks like in 5 months, 6 months, and 10 months from now?
I think all of this is very unclear right now. I mean, first, you've got an administration that can't get its story straight. There are competing rationales for what's going on. Also, I think just kind of in terms of the hemisphere, different countries are lining up on different sides. So you have a country like Brazil that is pushing back already against this, and Argentina is welcoming it. So I think there'll be a split in the short term inside the hemisphere over the U.S. reaction, over the U.S. action. And some of this will depend on whether or not Donald Trump decides to try to make good on his threat to do something about Greenland and Cuba and Mexico. So, I mean, we're in uncharted territory. Anybody who tells you they know what's going to happen in Venezuela, you should take a deep breath.
Tina, I mean, if you look at the broader strategic context, again, it was very clear in the national security strategy that it claimed the right to dominate Latin America. So is this, would you be worried if you're a country in Latin America, or should everyone be worried across the world?
The national security strategy was a fascinating document, and I called it a shock but not a surprise, which is a phrase I'm using a lot lately. It's the kind of thing that we've all been writing about and thinking about, and yet there it is in plain language. The old children's joke that the 10,000-pound gorilla sleeps wherever it wants, that's what's happening right now. And I think every country in Washington's sights is rapidly recalibrating their position. But all this is happening in the context of a very bullish mood in markets, right? Where I think that all news is good news in this environment until there's a negative signal.
Peter, are you surprised that Republican lawmakers are largely standing by Donald Trump, actually calling the move legally justified?
I'm not particularly surprised by that. That's the kind of, I would call, the small rally around the flag here. I mean, in the short term, this helps Donald Trump. It takes affordability, his age, the Epstein files right off the front page. You can't find it right now. Look at Bloomberg's site, every major media site. But that's not going to last very long. And if you look at the poll numbers in the lead up to this intervention, Americans were overwhelmingly opposed to doing something in Venezuela. So I'd be very surprised if he gets much of a rally effect from this. And I think the interesting thing to watch will be what happens inside the MAGA coalition. So there are some on Capitol Hill that are supporting, but, the influencers inside MAGA are it's a little unclear right now, but some are moving in the opposite direction.
But if President Trump manages to lower oil prices, does it help with the midterms?
Maybe at the margins. The midterms are a long ways off. And right now, all the needles point towards the Democrats.
What are you looking for next?
Listen, what happens next inside the country will be important. It was striking that there was no resistance to this U.S. operation, and it was also striking that the much vaunted Russian air defenses provided no support. So what I'm going to be watching for next is how Russia and China react. I think that in Congress, Congress has not been consulted. And here's something really important. We like talking about international law. We want rules of the game. But everybody loves a winner, and that dynamic is a powerful one. So if the move in Venezuela, as extraordinary and probably illegal as it is, appears to be working, look out, because President Trump has already said he's going to do it again elsewhere. Now, overreach, capacity constraints are all very real, but this is geopolitical power in its rawest form.
But, Tina, if you look at China, I mean, how would China be looking at this? Because they're a huge consumer of Venezuelan oil, so they can't be liking this.
4 to 7%. But here's what's interesting, and you've brought up the national security strategy a couple of times, and we've talked about how the United States doesn't need the oil. President Trump's language on this was interesting. He said China will still get the oil, but the United States wants to control it. So this isn't a spheres of influence, balance of power kind of arrangement. This is the U.S., consolidating control over natural resources, and it's in Trump's gift to allow other parties to have them.
Peter?
On this point, I would just add that this weakens an already weakened rules-based order. Right. I mean, rule number one is you don't attack other countries unprovoked. That's the rule.
Or show up in the Capitol and grab their president.
This is the position the U.S. took over Putin's invasion of Ukraine in 2022. It's the position the United States has taken for decades with respect to China and Taiwan. This loosens that yet some more by Trump, acting in a pretty brazen way where, it's outside the purview of certainly the UN, but also, as Tina just pointed out, the U.S. Congress.
How does Russia look at this? How does Saudi Arabia look at this?
First of all, with envy, right? President Trump was able to, decapitate the regime, presumably with collaboration from inside, given that no shots appear to have been fired, and spirit away Mr. and Mrs. Maduro in their pajamas so that they appeared in a Manhattan district court the next morning, whereas Putin is still fighting Ukraine in the mud almost 4 years later over scraps of land at the cost of 1 million men. So this is a blow for Russia, as well as the fact that Venezuela is a client state of Russia, along with Iran, which is under major pressure from protesters, Armenia, and Syria. So the Russian security guarantee is not the hedge it once was. That won't go down well with Putin.
Peter, is this a new phase for Donald Trump, or is it a continuation of what we've just seen but more aggressive?
I think that's TBD because, I mean, he's already demonstrated before in the case of, let's say, bombing Tehran back in June, that he's prepared to use military force. And this is another case, you know. I mean, if you take the Wall Street Journal story today, he resisted using military force for the past few months, pushing back against Marco Rubio and others inside the administration, and perhaps, reached a point in which Maduro just, was flaunting, pushing back in his face, partying over the holidays and so forth, or that Trump decided for domestic political reasons that this was the best moment, the appropriate moment for him to go in. Whether or not this becomes kind of like the new normal where the U.S. is focused entirely on the Americas and demonstrating a kind of sphere, the Monroe Doctrine and updated Monroe Doctrine, I think remains to be seen. The administration has competing factions. I mean, my view of the national security strategy, it's basically a party platform. There's a little something for everybody in there. This administration has yet to figure out what its strategy is.
So interesting. Thank you both for joining us. Tina and Peter Trubowitz, international relations professor from the London School of Economics, and Tina Fordham, co-founder and geopolitical strategist at Fordham Global Foresight. Coming up, we'll discuss the market impact of Nicolás Maduro's ousting with BlackRock's global chief investment strategist. That's next, and this is Bloomberg. Conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, America's allies and adversaries have been put on notice after President Trump's ousting of Venezuelan President Nicolás Maduro. Now, the dollar advanced to its strongest level in 2 weeks as the move sparked an increase in geopolitical risk. Now, to discuss all of this, we're joined by Brendan Murray, who leads Bloomberg's trade coverage, and Wei Li, global chief investment strategist at BlackRock. Thank you both for joining us. Wei, I mean, Happy New Year, first of all. We wake up to this massive news, but the market is largely ignoring it, choosing the positive news.
Indeed. So from a market and portfolio perspective, really there are two questions that we ask ourselves in the face of this geopolitical development. The first one is, does it change our assessment of the central case? And second, does it make the distribution more risky? Because all else equal, if we have a more risky distribution, then we would want to de-risk as well. So the answer to the first question is, no, it doesn't change our central case, because the typical transmission mechanism of a oil shock is really absent in this case. We actually see near-term and medium-term more negative catalyst because of the increasing capacity production from Venezuela, even though it will be very, very slow. The second question, does the distribution become more risky? Well, from the previous panel, we heard that there's going to be a huge amount of uncertainty in terms of the local politics, but it is irrelevant for global markets. And more broadly, we see the latest development as a manifestation of a polyfocated world driven by mega forces. And in this particular case, we're talking about geopolitical fragmentation as well as energy transition. So I think that framing of this polyfocated world of wide range of potential outcomes on the table, it's hard to argue that has changed because of the latest development, which is why we stay risk on at this point.
If you're Saudi Arabia, if you're China, if you're any country right now, would you not try and diversify away from U.S. assets because you're just afraid of what this president might do to your country?
One observation from a market perspective I would make is that in terms of the concentration and how big U.S. markets are, it's really hard to really walk away, right? So if you add up the equity percentage of U.S. equities as a global, in the global benchmark, and you add that with the equivalent for fixed income, you get to 88% for U.S. assets across equities and fixed income. And if you compare that with the next kind of second and third, which is Japan, China, they are close to 10%. So how do you really diversify from the U.S.? Not to mention it is also being driven by AI momentum, it's driven by potentially more positive fiscal impulses, and also a Fed that is poised to ease more. And when you bring all of this together, we stay risk on U.S. assets at this moment.
Yeah, very fair point. Brendan, what do we do with trade? So 2025 was kind of, a lot of the focus was on trade, but then it still found where it needed to go. So we've largely ignored it.
Yeah, exactly. The Trump administration has called 2025 the year of the tariff. And if that's the case, then 2026 is really the year of tariff consequences. Now, whether those consequences turn out to be good for the U.S. economy or not depends on where you sit. The Trump administration would say that there is a manufacturing revival that's about to be unleashed. A lot of economists would say, on the other hand, that tariffs will continue to provide headwinds to growth and pressures on inflation. So, and then you overlay this new geopolitical tension with Venezuela on top of it, and the word that we're going to start hearing again is uncertainty. Now, the Supreme Court in the U.S. is going to decide whether President Trump has this far-reaching tariff authority. The Supreme Court comes back into a session next week. We don't know when that decision is going to take place, but again, if that is drawn out for a long time, this uncertainty about where the tariff policy goes for the Trump administration remains something that investors will see some risks around.
Brendan, I mean, does the trade policy that the president and the administration put in place show that actually doesn't make much of a difference, or is it because other countries didn't retaliate?
Well, I mean, that was one of the main things of 2025 is other countries didn't retaliate. But you look at this new dynamic with Venezuela in terms of the region, the Trump administration is going to start renegotiating the USMCA deal with Canada and Mexico. And so, you have obvious, issues with Mexico and the drug situation, and you have Canadian energy factoring into this new dynamic where the U.S. is going to completely upend the regional dynamics around energy. So it creates a whole new points of leverage in those USMCA conversations that are going to play out. And the U.S. administration has said they want some significant changes to that trade deal.
Wait, do you look at trade, or is this again something of 2025?
Yes, we definitely look at trade in terms of read across to growth and inflation. But if you look at effective tariff rate, we're talking about low teens averaging for last year, even though at some point, especially in April, we're talking about very elevated level. The way that we frame navigating incoming trade headlines is to really frame it around what we call immutable law. So narratives can swing wildly, which we have seen in plenty of examples last year. But actually, there are foundational laws governing how markets and also economies operate. Those things cannot change too quickly. And trade and global supply chain rewiring is one such immutable law, which is why even though there were lots of uncertainty, peak trade uncertainty back in April, we're able to add risk and deploy risk because we see immutable law binding. And this is something that we see continuing for this year as well.
Wait, what do you do with AI? I know this is, as you said, largely driving all of U.S. stocks. So are we going to see a correction this year?
Well, we continue to favor AI theme. In our outlook, we built the framework to understand how do we make sense of these huge numbers being talked about in terms of capex spend all the way to $8 trillion by the end of the decade. How do we justify, how do we rationalize those numbers? There is a narrow path to potentially justify that. We're talking about, number one, growth needs to break out from the historical kind of 2% trend. And number two, AI builders need need to capture greater share of revenue, because the growth breakout allows for greater revenues to be generated, but then the bottom-up profit split is highly uncertain. And if AI builders do not manage to capture that revenue, then we have a rotation story. But right now, we actually see the trade continuing.
I mean, how do you look at a possible bubble in AI? I mean, it's fine if it's in a bubble as long as it doesn't burst, and I guess valuations, catch up with growth. But what's your metric?
Yes, there are a few signposts that we watch out for. The first is around is the financing gap still sustainable? Is it manageable? And currently we look at the financing gap for U.S. equities, compare that with beginning of 2000. It's very, very different. Back then they had a lot of debt, very few free cash flow, and now the opposite is true. The second thing that we watch out for is also around revenue. Because we can have AI companies spending on each other, but if they are not if all this spend is not creating external demand for the products that are being created, then that is not sustainable. And right now we're seeing earnings supporting the narrative that external demand for these new products being created is increasing. And then over the slightly longer term, we also want to see new revenue streams being created, going beyond just AI companies taking market share from the other players, from the smaller players, because in order to justify this huge amount of, in terms of speed, really unprecedented capex spend, we need to see new revenues being created. And right now, too early to say, but that's a key signpost that we watch out for.
And the other thing, Brendan, that we're looking a lot at is China. What happens to China in 2026, especially when it comes to trade and tariffs?
Yeah, exactly. Remember, the truce that they announced a few months ago only lasts for a year, and it can take a long time for the two sides to negotiate an extensions of those. So we'll be interested to see whether Presidents Trump and Xi can put together the summits that they've talked about. They want to meet, they want to visit each other's home countries, and so that'll be one of the main ways to judge whether the truce is going to hold together. You got to keep an eye on soybean prices. China made a lot of commitments to buy U.S. soybeans, and how that dynamic plays out into the spring, into planting season for farmers, and of course we've got the midterm elections coming up in the U.S. So all of that will play into setting the tone for the U.S.-China relationship.
Wait, very quickly, do you expect that rivalry to weigh on markets?
Geopolitical fragmentation could demand persistent risk premium being priced in, but this is a year where we also have greater fundamental drivers, which is manifesting in a very focused earnings patterns playing out specifically on China. Like we see data stabilizing a little bit in December, signs of possible support, policy support, more cuts coming, but more broadly, it's not really, in our assessment, a reflationary push. Really just stabilizing support, so we're neutral.
Okay, thank you so much. And Brendan Murray from Bloomberg, Whaley, Global Chief Investment Strategist at BlackRock. What a way to get us started for 2026. Coming up, we'll talk to Amrita, the founder and research director of Energy Aspects, about Venezuela and the oil market. That's all next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. president demands total access to Venezuela after ousting President Nicolás Maduro, while Venezuela's acting leader strikes a more conciliatory tone after initially denouncing Maduro's capture. Donald Trump pledges billions of dollars of investment to revive Venezuela's oil industry, but there's no immediate commitment from the oil companies seen as best placed to invest. And the U.S. operation in Venezuela signals a new world order, but there's criticism from Brazil to China, while Denmark warns the U.S. to stop threatening Greenland. Now, the U.S. capture of Nicolás Maduro raises questions about Venezuela's leadership and whether Vice President Delcy Rodríguez can take charge without triggering new elections. Let's bring in Walter Brandimarte, Bloomberg's Latin American editor. Walter, thank you for joining us. So, how unstable is Venezuela right now, and what can we actually expect to happen next?
Hi, Francine. Thank you for having me. Well, Venezuela right now is pretty much in a moment of shock. But for now, the state is functioning. Vice President Delcy Rodríguez is trying to keep the ruling coalition together. The military has stayed put so far, and the National Assembly that has just been elected a few months ago is scheduled to be sworn in today. That suggests that there is an effort going on there to, avoid a power vacuum. But what happens next, really, it depends on, how Trump decides to engage with the country. Is the U.S. Going to prioritize stability and oil production, or is it going to prioritize new elections soon? The first signs we've had so far is that they're not so interested in changing completely the regime. They're more interested in keeping, oil flowing, and especially more oil if possible. So that's what it looks like it's going to happen. And then there's also the fact, well, what happens in Venezuela, right? Because they also have their legislation, their laws, and whether Delcy Rodríguez is going to be able to keep everything together for the time being.
Walter, I was going to ask you, how is Maduro's ousting colliding with the intricacies of Venezuelan law?
Yeah, so that's where it gets complicated. Venezuela law right now, well, it depends on how much Maduro's absence is treated as temporary or not. Right now, the Assembly has called it a temporary forced absence, which gives Delcy Rodríguez executive powers for up to 90 days, with a possible extension for another 6 months. So it means that we don't have to have elections right now. But if lawmakers in Venezuela declare Maduro's absence permanent, then that calendar could be, sped up, and you would have perhaps, the need to have elections faster. That, of course, if Trump is in agreement with that.
Walter, thank you so much. Walter Brandimarte there, Bloomberg's Latin America editor. Now, oil prices fluctuate as traders weigh the fallout from the U.S. capture of Venezuelan President Nicolás Maduro. Now, for more, we're joined by Amrita Sen, founder and director of market intelligence at Energy Aspects. Amrita, thank you so much for joining us. How do you think the topping of Maduro will play out in global oil markets?
Thanks. Look, I don't think the oil market's going to react and hasn't been reacting as we've been expecting much to the Venezuela news, simply because we are looking at an oversupplied market in 2026, and there is a supply cushion, right? OPEC's been unwinding. We've had non-OPEC production growth. So the market isn't really concerned about the fact that we've lost about, or probably more than half of Venezuelan exports in the last few days. And if anything, there's more downside risk in the short term. The questions we are getting from our clients is actually about that 2 to 3 year outlook. Lots of people asking us about, does this mean we're going to get millions of barrels per day of Venezuelan oil flowing? Way too premature to talk about that.
So do you think the global market is still heading for a glut? And actually, in the shorter term, do you see Venezuelan oil production rising?
I don't think the short-term production increase is actually on the cards for Venezuela, simply because of the blockade from the U.S. and sanctions from the U.S. are still in place. So nothing has actually changed. Yes, the current president is striking a little bit of a conciliatory note with the U.S., but fundamentally, if you take a step back, other than Maduro not being there, nothing's changed. Also remember, even to just increase 500,000 barrels per day of production, it will take them at least 2 years and $10 billion, according to our estimates. And anything that gets them to 2.5 million barrels per day, which was their peak, would be about 7 to 10 years and hundreds of billions of dollars. So we are talking about a very gradual, if at all, any increase, right? But yes, short term, the market is well supplied. We are looking at a Q1 well over 3 million barrels per day of surplus. The only thing I will say there, though, is both Kazakhstan and Russia, there is supply losses mounting over there. The market's not focused on that right now, but I think if that continues to mount, the surplus that the market's expecting will be a lot less.
Do you think U.S. oil companies will actually return to the country, and how quickly and how much can that revive Venezuelan production?
I mean, look, that's the main question right now, right? Like, of course, the companies are keen, but our kind of conversations with some of the big majors suggest that A, they weren't really aware this was going to happen, but B, also they're not, jumping to get back in there. The damage to Venezuelan infrastructure, and I cannot stress this enough, is so large. Simple things like you need gas processing plants to even think about increasing oil production, and that's one of the biggest challenges Venezuela has. It's just the sheer damage has been so extensive. It is going to take billions of dollars. And then the companies need to also be confident that when they do go back in, any new contract that's signed, a new government, say, coming in the next few years, will actually honor it, right? Let alone the hundreds of billions of dollars of debt that PDVSA still has, and it owes even countries like China. So this is very, very complicated, and I don't think the U.S. companies will be, jumping to get back in overnight.
Amrita, you mentioned China. What do you think the reaction from Venezuela's biggest customer, China, will be?
I mean, look, they've already come out and they're not happy about what has been going on. They've been pretty vocal about that. In terms of the oil side, China actually stockpiled a fair amount of the Venezuelan oil. The Venezuelan oil is not bought by Chinese majors. It's bought by what we would call teapots, the smaller independent refiners who like to buy sanctioned, or they can afford to buy sanctioned oil because they're not really in the U.S. financial system. They had stockpiled a fair amount. So any disruption to Venezuelan flows right now won't really hit them for some time. We've seen bitumen prices in China pick up this morning because obviously a lot of that Venezuelan oil is very rich in bitumen. But I don't think they are in crisis mode just yet. But let's see how this unfolds. It's still very fluid, the situation, right? And I do expect China to kind of make not just statements, but let's see what the next move is with regards to what happens if there's bigger push from Trump to get more U.S. involvement in the oil sector there.
Amrita, how are you expecting actually the OPEC plus coalition to react?
Not anything specific to Venezuela, really, right? And they've always shown, and we've seen this not just over the recent years, but even in the past, they are really about ensuring stability in the oil market. That's why yesterday's meeting, they just focused on the fundamentals. They've said that they're going to pause unwinding for Q1, exactly what they continued with, because they need to see how the fundamentals unfold. It's the weakest quarter for balances, and I just don't think they're going to get dragged into which they've never been in terms of the politics of what's going on with any of their member countries. For them, it is really about balancing this oversupply and what holds ahead or what comes ahead in 2026.
Amrita, thanks so much. Amrita Sender, founder and director of market intelligence at Energy Aspects. Now, let's also take a look at how the U.S. capture of Nicolás Maduro may recast the energy industry in Venezuela with Mitchell Furman, who covers Europe's big oil firms and joins me now. Mitchell, thank you so much for joining us. So which European firms are actually set to gain from this?
Yeah, well, Eni and Repsol are already in a joint venture in a gas field in Venezuela, and they have some other holdings there. So, since they're there already, they could potentially benefit from this. But it is still very unclear which companies are actually interested in boosting their investment in Venezuela.
What does it mean for the big oil majors? I mean, again, we're just speaking to Amrita. We don't know the terms. We don't exactly know what the proposition from the Trump administration and also, I guess, the laws in Venezuela permit.
Right. Yeah. I mean, Chevron is the one that's clearly in the best position. They've been in Venezuela for 100 years. They're currently holding a license there to produce and ship oil, even amid this current Trump administration partial maritime blockade. And so they have the footprint. They've been in touch with the Trump administration all along. They'll be leading the way for now. Whether other companies join them, that remains to be seen. But Chevron and U.S. oil company stocks in pre-market trading in the U.S., they're rising, so we'll see.
Who are the losers beyond Maduro, of course?
Yeah, well, Venezuela State Oil Company will likely get partnerships from some of these companies, but their position is still very unclear. The industry there needs a lot of investment to repair. It's very dilapidated. The infrastructure, from production being boosted to substantial degrees, will take years.
Mitch, thank you so much. Mitchell Furman there with the very latest on some of these oil companies. Now, coming up, we'll talk to Robert Friedland, the co-chair of miner Sunrise Energy Metals, which saw its stock soar more than 3,000% last year. More on that and its holdings of rare earth minerals next. This is Bloomberg. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, last October, President Trump and Australia's Prime Minister Anthony Albanese pledged a combined $2 billion to break China's stranglehold on critical minerals. One of the companies to benefit from the security pact is Sunrise Energy Metals, developer of the world's largest high-grade deposit of scandium, a metal essential for 6G tech and next-gen fighter jets. Well, Trump's efforts to secure access to rare earth minerals has propelled Sunrise Energy stock up more than 3,000% in 2025. Well, joining us now from Singapore is Robert Friedland, co-chair of Sunrise Energy Metals and founder of Ivanhoe Mines. Robert, thank you so much. Happy New Year, and thank you so much for joining us today. It's a bit of an odd start to the year, given everything that's going on in foreign policy, U.S. foreign policy in Venezuela. Is there a read across to rare earths? Is there a lot more anxiousness out there of what the U.S. does next?
Francine, Happy New Year. We're living in very interesting times as the world continues to balkanize into competing economic groups. And in that balkanization process, critical raw materials are going to remain at the center of our consciousness for decades. And amongst the rare earth metals, which are about 17 elements that occupy little squares in the periodic table, scandium is the most important and absolutely critical for everyone's daily life.
What do you think the Trump administration will do on rare earths going forward?
This administration is the first administration correctly focused on understanding where things actually come from. This mystical concept of the supply chain is suddenly becoming real and opening at a theater near you. In the case of scandium, we can't have 6G wireless, our next generation of wireless telephones. We actually need it for 5.5G telephones that Apple is selling you right now. It's also used in lightweight aluminum alloys. It has numerous uses in national security and defense. And it makes aluminum into a lightweight, very fuel-efficient material. It will be used in everything from the automobile industry to the aviation industry. It gives you an example of how these critical metals, which heretofore have been almost entirely supplied by China, have to be supplied from Western supply chains, as different competing economic blocs tend to play to their strengths and play against the weaknesses of their competitors.
But Robert, it's an alloy that's basically used to strengthen other metals and also used in semiconductors. And as you say, China is dominating, right, this production of scandium. So is your pitch that this is a Western supply chain of the metal?
This is the year that China has essentially weaponized the supply chain, not only for scandium, but many other critical raw materials. And we're responding, as you can see by current events around the world, on all critical materials, because if everything we touched, we either mined it or you grew it agriculturally. And as you balkanize what was formerly an integrated just-in-time world economy, and you become a just-in-case world economy, some of these raw materials are going to be of nearly infinite value. And you see the United States dollar failing against these things you absolutely have to have.
What's your expectation for scandium shortage this year? And apart from this, are there any other rare earths that you're looking at?
Well, first of all, rare earths are not rare and they're not earths. They're relatively common metals, but we lack the processing capability for a lot of these materials, and we are entirely dependent on China for most of them. China also has requirements for our semiconductors or for crude oil from countries like Venezuela, for example. And so you're going to see a continuing, escalating competition for these supply chain issues until we find a way to live with each other. At the moment, the competition continues to intensify, and it's likely to continue to intensify, and you'll see this in higher and higher raw materials prices expressed in the United States dollar.
Are you planning to develop refining capacity? And if not, are you betting on the buildup actually of refining capacity outside China?
Yes, this rare earth resource sits in Australia, friendly country. It is fully permitted. It took over 14 years to get the permits. It has pipelines and railroads. It's ready to go. And we have the refining technology. The refining plant will be built into the United States. So mined in Australia, refined in the United States in the case of scandium. And that scandium will go in your handphones. It also has tremendous uses in all wireless technology, both defensive and offensive, for things like drone weaponry and aviation. Vladimir Putin's number one fighter jet is the Sukhoi 35, and also his Sukhoi 57. They're both built with scandium aluminum alloys. This is a metal that you blend with aluminum to turn aluminum into a super material, much better than plain aluminum.
Robert, how big is this? What are the resources and reserves, and what exactly is your final investment decision on this? How much are you putting in?
This asset is part of a much larger cobalt and nickel resource that we have worked on for around 15 years. It's the largest, highest grade scandium deposit ever discovered in the world, and it's big enough to supply total Western world supply for many decades. We're going to fill in one little block on that periodic table that you can imagine behind me, and scandium will be one of the things we no longer require. But we have many other critical metals that are not limited to the ones that are often referred to as rare earths. And of course, the really famous ones are the king of all metals like copper. And between copper and below copper, there are scores of absolutely critical metals that will attract an enormous amount of financial, community interest, and investment interest.
And what final investment decision will you make on this?
Oh, we've made it. We've already initiated construction. The Sunrise project in New South Wales, Australia, is fully permitted. It's ready to go, and long lead time items have been ordered, and construction has begun with a view to have it up and running in less than 2 years, which in mining timeframes is literally tomorrow morning.
Can you give us an idea of how much money you're actually pouring into this?
Just a matter of scale. The current world market is only 90 million tons a year. So compared to our Oyu Tolgoi copper development in Mongolia, which took close to $20 billion of capital, or compared to our Kamoa-Kakula copper development in Mongolia, which took $10 billion of capital, this scandium mine can be mined with a little teaspoon. It's the low hundreds of millions of dollars to get into production. But it's absolutely critical. It's like if you had a 747 aircraft parked on the ramp, there might be 2 million parts to that airplane, but if 1 or 2 parts are missing, it cannot fly. And that's what we call critical raw materials. They're critical because you cannot live without them.
Robert, you're also, of course, well known for your involvement in some of the massive copper deposits. So I need to ask you about the Kakula mine. How is the recovery work going, and how is the company managing this recovery work together with Xijing?
Oh, we've just announced that we're really well on the track to recovering from a flooding incident due to seismicity. Our smelter, which is the largest smelter on the African continent, is up and running. We'll produce approximately 400,000 tons of copper metal this year and about 550,000 tons next year. So Kamoa-Kakula will remain in the top 3 or 4 copper mines in the world and will continue to advance to being number 2 by the end of the decade.
Robert, as always, thank you so much for joining us. Robert Friedland, co-chair of Sunrise Energy Metals and the founder of Ivanhoe Mines. Now, after tracking thousands of companies from different industries around the globe, Bloomberg Intelligence has compiled a list of 50 worth carefully watching over the year ahead, for better or worse. Tim Craighead, one of the editors of this list, is with me now. Tim, Happy New Year. How do we come up, first of all, with these 50 ideas?
Yeah, so great to be here. These 50 are part of a broader group of over 100 focus ideas. These are views that our analysts have across companies where they're high conviction, they're out of consensus, and there's catalyst ahead to sort of change the market mentality to avoid value traps, if you will. And in this instance, all of these have catalyst or triggers that are coming up that we think are quite important in 2026. And you can find all of them on BI Focus, of course, on the terminal.
So the transformative effects of artificial intelligence, of course, looking like a key focus. What kind of ideas are either related or driven by AI?
Yeah, so it's one of the largest buckets, if you will, of the list of 50, a little less than 10. And within this, they're sort of enabling technologies or second derivative plays. So in semiconductors, NVIDIA is not there, but TSMC is. You can't have NVIDIA without TSMC. Samsung is on here because of the pull-on effects in DRAM, where they're the largest manufacturer. Marvell makes ASICs chips that are also acting as accelerators, so it's a different play. But you've got Reddit also that, it's getting ad-driven revenue increasingly from AI. So there's a variety of different ways to think about AI as it plays through.
So, Tim, who are the CEOs? I mean, first of all, CEOs, products, or innovations that you're looking at?
Yeah, so all of those are part and parcel. CEOs are important. Here in Europe, think Diageo and Sodexo. Those are two companies that have suffered 2 years or more of negative earnings revisions. We think inflections are at hand, in large part driven by new initiatives, new focuses with management coming in place. New products, there's a variety of consumer product companies that we all know and love. Nike, we think, is at an inflection with new products coming through. Brinker, you might not know, but if you've been to the U.S. and you eat out, you probably know Chili's. That's who Brinker is.
Everybody knows Chili's.
Everybody knows. And they're redoing their stores, upgrading their stores, a whole new menu that we think is important. So it's a number of ideas like that.
I mean, there are a number, of course, of U.S. tariff policies that could change at any moment, or foreign policy, given what's happening in Venezuela. Yeah. How does that weigh on your thinking?
Trade plays through quite interestingly. On the one hand, you've got Nucor. Speaking of metals in your prior interview, this is one of the steel companies in the U.S. There's still limitations, which is creating a tailwind for Nucor. Boeing is on the list because if you want to have a better trade structure with the U.S., buying some expensive planes is not a bad thing. On the other side, however, ArcelorMittal is on the list, more on the concern side. 10 of these ideas are cautious, and ArcelorMittal has more supply facing itself here in Europe that we think could be problematic.
Tim, is there something else that we should be looking at for in terms of foreign policy that could impact, I'm thinking of oil companies, but is there a subset group of national interest from the U.S. that could impact companies across the world?
Well, I think, certainly, and this goes across a number of different categories, both from the standpoint of positive. You think some of the defense companies where the U.S. defense, contractors are still the predominant supplier, even from a European defense perspective. All of this is in focus, obviously, today. But you've also got the cautionary side of things from a U.S. policy perspective. Think big pharma and drug pricing.
Tim, as always, thank you so much. Tim Craighead, a Global Chief Content Officer for Bloomberg Intelligence. Now, there's also an exclusive interview with Wilbur Ross, the former U.S. Commerce Secretary, on open interest just after 3 p.m. London time. Up next, Bloomberg Brief, and this is Bloomberg.